This is just to let everybody know we're recording this session. Thank you. Please.
Thank you. I was saying that there's a lot already happening in terms of biofuels, fertilizers. There's a steel mill to be announced soon, and among many other big businesses that are moving to Brazil because of these characteristics. One thing that is also important to mention regarding the relationship between Brazil and the US is that when you take into account the numbers of the official numbers of the US in terms of the potential investments in greening the electric matrix of the US, it may require at least 29 years for the US to have the actual electric matrix of Brazil. So almost 3 decades. Brazil is not only almost 3 decades ahead, but Brazil has also already invested and discounted those investments in its balance sheet. So that's to say that the marginal cost of the green energy may be extremely attractive, and that's parashoring, joint with the other features. So Brazil can be a big ally, not only of countries, but also of businesses that need to decarbonize because of compliance, because of energy security, because of the need to become and to competitive in this new frontier of businesses. So regarding risks, maybe these days, well, you could of course say that Brazil as an emerging country is riskier than developed economies, and that's obviously true. But when we take into account features that are already available in the country in terms of comparative advantages that are not necessarily available in other places, this may, in a way or another, compensate or at least partially compensate in terms of cost of capital. The government is already working around many legislations in order to create a friendlier environment for foreign capital to come to jump in, being in green hydrogen, being in fertilizer, as you just mentioned, and some other sectors. There is more that could be done, but I would say that BNDES and multilateral development banks are working together in order to provide some type of de-risking for those investments. But I'd like to stress again that because we have in Brazil features that are extremely attractive, this may per se be a key factor for those investments that not only look for power shoring, but also are considering things related to geopolitics and decentralizing production in terms of trying to address things related to extreme natural disasters. So I guess that these 3 factors have these days to be considered, especially for those sectors that are energy intensive. So again, Brazil can be part of the solution for decarbonized sectors, for helping the competitiveness of specific sectors, and for helping, as a final word, one thing that is becoming more critical, which is the just and green transition, being in the destination country, Brazil in this case, by hosting investments that create jobs, income, and exports, this per se may have a huge impact on the territory. But by producing green products and services much faster and at a cheaper cost as compared to other places, this may also benefit the common people in countries that are these days somehow considering the green inflation as an obstacle for them to embrace the green agenda.
Well, thank you so much, Jorge, for that really illuminating overview of power shoring and the opportunity that it represents. We'll, I imagine, return to this in just a second, but before we do, I wanted to welcome our fourth panelist, who's joined us in person here at the office, Duncan Bonfield, the CEO of the International Forum of Sovereign Wealth Funds. A great privilege to have you here, Duncan. So as I mentioned, Duncan is CEO of the International Forum. Prior to his time leading the organization, he was Director of Corporate Communications at Land Securities, an FTSE 100 listed company, and the UK's largest listed property company. In his role leading the International Forum, Duncan is a critical part of an ecosystem that we think has a tremendous role to play in the mobilization of climate capital, especially given the near universally agreed upon need for patient capital in this space. So with that said, thank you so much, Duncan, for joining us. We're approaching the event in the form of a sort of structured discussion, and we'll be so grateful to hear your perspectives throughout, and especially in just a few moments when we address the role of sovereign wealth funds. So thank you, Duncan, for joining us.
A pleasure. I do apologize to my fellow panelists and the audience for the troubles I had joining remotely. So I've come in person, old-fashioned. So we'll see how that goes.
Fantastic. Well, thank you so very much. Anna, back to you.
Thank you, Paul. Thank you, Duncan, for showing here. So I guess I'll move my next question towards the role of BNDES in this process. And what is it that BNDES has been doing in terms of solutions for financing innovative energy transition for Brazil? We've seen recently the launching of the Eco Invest program alongside with the IDB, and that represents a true effort in finding an innovative financial tool to gather more investments towards the ecological transformation plan, and more specifically, mitigating risks related to exchange rates. So in addition to that, and if you also want to jump into that and its role in terms of energy transition specifically, what else has the BNDES been doing? And maybe more specifically also towards innovation, and what has it been able to deploy in that sense?
Yes, thank you, Anna. Thank you, Paul. I'm going to start talking a little bit about BNDES experience with the energy transition of Brazil. BNDES was there since day one. It all started back then when Brazil had a shortage of energy in the year 2000. And BNDES took the risk and to expand its renewable electric matrix. So, and by doing so, with the wind energy and more recently solar energy, we became the biggest financier of green energy in the world. This data is from Bloomberg, so it's not from BNDES, it's somebody else saying that. And that was very important, but we weren't alone in that. And what made it possible was a public policy. And we need public policies to increase and to multiplicate these resources to the climate transition. And the public policy for the expansion of renewables in Brazil back then was the ProInfra, which was a program that made possible, that made public calls for purchase of energy. The government did that, and BNDES took the risk to finance this newcomers that came to Brazil to build these power plants in Brazil. So it's very similar for what is happening today, because as Jorge was saying, Brazil has the fundamentals. We have the best wind, we have the best solar radiation, and right now we have the best electric matrix in the world, the cleanest one. So now we are in another phase, and we are in a critical phase because we need all the technologies. We need all the solutions that are there. We don't have to compete because we need everything to solve the climate crisis. And since we have the power shoring, BNDES is working not only with the EcoInvest, because the EcoInvest has like 5 lines. One of the lines is a blended finance line that other banks will also be able to fundraise. And so I think these 2 lines of EcoInvest are very important. I'm going to tackle them a little bit. The blended finance one, which the government is delivering 1% a year resource for the banks, but they need to leverage minimum 6 times the amounts that they are taking with this resource. So if I get R$1 from the government, I will have to fundraise R$6. So this is one mechanism to multiply this cheap resource and to make these disruptive projects to get them out of the paper. So we know that the new technologies are expensive. They are more expensive than wind, than solar, but we need them and we need to expand them. And the other line of the EcoInvest is the line that Anna has already said, that the government is taking the foreign risk, the current foreign risk. So this is very important for projects that have a capex that is imported, and also for the investor that has the income in reais. So these mechanisms of de-risking the foreign risk will be very important for projects of biomethane. For example, they are arriving here in BNDES. We have comments, and they are arriving. Biomethanes from urban solid waste, and also biomethane from agriculture, and also the ethanol sector. So this is one technology that we need to expand, and Brazil has the potential to do that. And I think we have the Fundo Clima also, which is the new Fundo Clima that the government issue a sovereign bond and fundraised $2 billion for the Fundo Clima, and BNDES is operating the Fundo Clima. And we are using this also, these resources to blend with our funding and to make this type of disruptive projects become real. So biomethane is one sector that we are fomenting. Green hydrogen, some projects are in the pipeline, and all other energy transition technologies that we have to advance. But I think we need also to talk about disruptive and innovation mechanisms and financing instruments. And we have to be creative, because Brazil, we have the fundamentals, we have the power shoring, the nearshoring, but we don't have fiscal space as US and Europe. And we are competing, with them. So when an investor decide to invest in a green hydrogen or a wind offshore, if the US government is taking the price our comparative advantages have to be really strong, so they would come to Brazil. So this is one thing that we have to be aware of, and we have to address with financial innovation. And the Eco-Invest is one of those things. The Fundo Clima is another thing, but also grant money. Grant money is really important, since we're talking about, we are here in GFI. I think grant money is really important also to de-risk projects and make the capital costs of this disruptive projects decrease. So BNDES has also this experience by using its grant money. We have a social environmental fund that we are recently using this fund to multiply other funds. We are using it to match fund with other companies, investors in the forest agenda. The Restaura Amazônia is one example, which is a very big project that the Fundo Amazônia is launching, this match funding mechanism. We launched a blended finance call also that we used our grant money and we made a call for financial institutions from the capital markets, and we blend our grant money with theirs to invest in projects like agroforestry in Bahia, and also these projects that are needed also in the nature sector, that Brazil has also this big potential. So we have to be creative. And since I'm talking a little bit about the capital market, the capital market has its role in this transition. And BNDES has also a very long experience with the BNDES, the participation branch, the capital market branch of BNDES, and we are prioritizing our funds to the climate change transition. For example, BNDES has just launched with Vale a fund to invest in critical minerals in Brazil. So BNDES is using all its lines and financing mechanisms, since grants, capital markets, credit, debentures, to mobilize and to de-risk and to make the capital costs of these investments lower, so we can take them out of the paper. And another potential of Brazil that I would like to address is bioeconomy with carbon capture storage. Brazil has a long experience in bioenergy with ethanol. And scientifically, we know that if we capture the carbon in the ethanol plants, is the most efficient way to capture carbon than in a natural gas, electric natural gas plant that they emit other gases rather than as also CO2. But in the ethanol plant, we just emit CO2. So if we capture the CO2 there, and we also plant the sugar cane, we will have bioenergy with negative emissions. And we'll have that in scale, because we are doing that already. We just need the the carbon capture and storage part of the role of the project. So, and in Brazil, this is another advantage that Brazil has. We have the technology, we have the scale. We just need to add the carbon capture and storage movement. So we are very competitive in the sustainable aviation fuel because of that. We can deliver sustainable aviation fuel with negative emissions. Who can do that in the world, if not Brazil? So Brazil has this power to deliver to the world negative emissions, not only with its electric matrix, with its bioenergy experience, but also with its nature. If we restore our forests and we halt this deforestation, we can be Brazil can be net zero and will deliver negative emissions by 2050. And to finalize my words here, I would just say that in the last IPCC report, one of the illustrative mitigation pathways was made by the Federal University of Brazil, the model, and is the model that will have most negative emissions, that will need most negative emissions, so we can still dream about the 1.5 global warming. And this model, what is the pillar of this model is BECS, is bioenergy with carbon capture and storage. And we are going into this path because we haven't halted emissions. We will overshoot, and this is the trajectory that we are heading for, this illustrative mitigation pathway. So we will need Brazil's negative emissions to get there. So I'd like to finish with that, reinforcing here all Brazil's advantages, because Brazil is the country, a big country that can deliver to the world a lot in terms of climate transition. Thank you.
Well, thank you so much, Marta. I'm really excited to bring Duncan and Frederic into the conversation. But first, actually, if I could just ask maybe a slightly provocative question to you, Marta, and also Jorge, perhaps you'll have a perspective here. Hearing you speak, Marta, it's really remarkable to hear the wide range of structures, of funds, of programs that BNDES has created to offer really targeted credit. But I wanted to ask about another side of BNDES, which is the equity side, right? BNDES has this large organization, BNDES Participações, BNDES PAR, which perhaps in contrast to moments in the past, seems to be really vanilla in its holdings, right? It's just basically the largest companies in Brazil. And so I wonder, perhaps my impression is mistaken, but do you see possibilities to leverage the equity side of BNDES in service of some of these objectives?
Yes, this is a sensitive theme here in Brazil, and especially for BNDES. BNDES hasn't invested directly into a company since 2016, so almost a decade without a direct investment in a company because of many things. One of them was, the history. The Brazilian champions, we were accused of that, but there was a logic in that, which was the exportation of our companies to the world, and most of the national development banks in the world do that. They invest in companies so they can export, and then they can multiply themselves outside their countries. And that was the strategy by then. That's why BNDES is focused on big companies in that time. We have just reviewed our investment policy to start investing directly into companies. But through this whole time, BNDES was investing in funds, and many funds. And the focus of these funds were sustainability, most of them, or funds of infrastructure, because Brazil has this huge gap in infrastructure. So BNDES PAR did work through all this time through funds indirectly. And the critical mineral fund is just one example that we have just launched with Vale. And so right now, we are working with funds and with instruments like the agro receivable certificates, for instance, that could be a very interesting instrument for forest projects and to, scale forest projects, restoration. And BNDES is also focused in this, not only with the funds, but also with the instruments that these funds use, with credit funds, investment funds, but the whole idea and the whole strategy of these investments is sustainability, mostly. If we take the portfolio of funds that BNDES is investing in, most of them is sustainability, the thesis of these funds. And but now we are going to start investing, and the policy is oriented also to climate transition and also the development of technology in Brazil, innovation. And so we will focus on companies that have these drivers, innovation, climate transition, but also social impact. We will have to measure the social impact from these companies that BNDES is investing in. So the policies is structured like that, some strategic themes, but also measuring the impact, not only the financial impact, but also the social impact, the environmental impact that these companies will have to deliver. I think Jorge raised his hand. I'm gonna let him talk a little bit.
Thank you, Marta. Just to complement what you just mentioned, BNDES is also developing the capital market through, as Marta mentioned, through funds. And those funds that are looking at sustainability and this type of things are, BNDES is working in a fashion such as matchmaking. So if a fund is able to attract a given level of investments, BNDES will come in and matchmake so that it is creating a kind of a spillover, a positive spillover in the country and helping others to go through and to expand. So I see this as a very attractive. And I mentioned that because when I was with CAF, we worked with BNDES in some funds, and they were very, very successful because by having a multilateral like CAF and a big national development bank like BNDES, we attracted a lot more private money. So it is really a successful story.
Well, fantastic. So thank you both so much for those thoughts. I'd love now to expand the conversation a bit and bring Duncan and Fred into it. So turning to you, Duncan, we just heard actually that one of BNDES's objectives as it participates in capital markets is to try to measure impact. And I know that with the rise of strategic development funds, the desire to deliver and measure impact and additionality in particular is just one of many considerations that these funds are bringing to the table. I wonder if you could say a bit about what you see as the role of sovereign wealth funds in addressing some of the challenges we've seen here. And certainly if you have any thoughts about the question of additionality or impact, we'd love to hear those as well.
Yeah, happy to expand on that. And it's worth me just saying let me identify a couple of different types of sovereign wealth funds. The ones you're probably familiar, if you are at all, will be the big savings funds, often in the Gulf, the likes of the Kuwait Investment Authority, the Qatar Investment Authority, the Abu Dhabi Investment Authority. the Oman Investment Authority, ones like this, where they were built through income from oil reserves. And they are savings funds, intergenerational savings funds. They're establishing a permanent financial resource to replace the natural resources that have a one-off usage and benefit. So those are the savings funds, and those are the big capital allocators that you'll probably know about. I mean, I'm here in New York, and I can look out of the window and I see the Empire State Building, which is owned by the Qataris. So that's a very international approach to capital and management. But then in addition to that, and this is perhaps more relevant, in those countries where, and this is most countries now that have debt and don't have much fiscal space, then how do they attract private capital into fund the transition and the new generation of electrical grids and clean energy and those kind of things? And one of the ways that they do it is to create a strategic development fund, which is, and it's a bit like I think what you were saying, Marta, in terms of the BNDES approach with funds. Is to actually have some skin in the game from the government, and then to crowd in external capital. And I'll give you an example of where this has been quite successful. And there may be parallels for you. You must be a judge for that. But in Indonesia, Indonesia, very large population, a young population, growing middle class. And so on paper, an attractive investment proposition. But had great difficulty getting private capital into it. It's got a track record of, let's call it politely, political interference, lack of clarity, over all sorts of things, and indeed corruption. So it's had those challenges. But what it did was appreciate those and almost put a fire break in by creating the Indonesian Investment Authority, INA. And that's had an amount of about $3 billion in terms of capital put in by the government, and it's got a target of crowding in 10 times that amount, and is working on infrastructure projects, and it's got a number off the ground that are in construction or close to completion, where it's crowded in a lot of external capital. And one of the ways that they were successful in that, they actually asked sovereign wealth funds, some of those big allocators, how should we best set up this system so it is in a way that you find attractive to your investments? So very much going to the experts and where the capital is, and to asking them for the approach for that. And interestingly, this is pretty much all equity capital. As I always sort of think, there's really no shortage of debt or even access to debt. It's equity that's the real challenge. So that's the way they've gone about it. In India, it's gone even a step further with their NIIF fund, where it's in effect a state-owned private equity company, and with the government taking a stake, and then it's got a management company, and that management company is part owned by the Abu Dhabi Investment Authority and GIC of Singapore. So those are some innovative vehicles to really to attract that external capital. And I think not dissimilar to what, if I understand it correctly, what Marta was saying about the BNDES. But I think that the difference being is that they've been specifically designed to attract that certain type of capital. And it leads me to another point, which is really about not just Brazil, but I would cast it even wider about Latin America. When you look at the global investment map, then really Latin America does not do as well as it should do in terms of getting its share of investment. And you've got to ask questions about that and why that is so. And I would posit one answer, and one answer is because there are different structures across Latin America. So, for example, with the development banks, and that is something that a lot of investors aren't used to. That sort of that style of investment and that style of approach. And when you have a competitive market, if you take the premise that there's a shortage of capital and there's competition for capital, if I can invest in, for example, the US, where the IRA has guaranteed me some funding and return, as opposed to investing in a market that I'm less familiar with and perhaps with less certainty and a higher risk in terms of both the politics, but also the financing structures around it, then it's pretty obvious I'm going to go for most times I'm going to go for to invest in the US, because it's a simpler decision, it's a lower risk decision, and so I can actually take a lower return on that. So those are all what combines into that kind of thing. So what we're seeing is that the bulk of sovereign fund money in terms of the energy transition is going into America and Western Europe. So, and that's simple fact. That's what we're actually seeing. So the question is, how does Brazil and Latin America get its fair share? And I don't come with any easy answers for this at all, I'm afraid. But just to say, there are some examples of what other countries and how they've tried to address it. I mean, these aren't necessarily a universal answer, but I think the approach of understanding what investors want and designing structures that they can understand and see through is pretty important in this area. But let me stop there, and I'm happy to come back to that subject if it's helpful.
Well, fantastic. I wonder if I might ask a follow-up.
Yeah.
So, I mean, it occurs to me that sort of another blocker that might account for some of the lower levels of investment, especially for major institutional investors globally in Latin America, is also concerned with a significant ticket size. And I wonder, I mean, that seems like it might be challenging when I think of the funds that BNDES, has so successfully been creating. They don't typically rise to the level that is, going to attract the attention of an Abu Dhabi investment authority or a public investment fund.
Yeah, and you get this, and this is also a challenge for a number of markets. I mean, across Africa, it's probably even more pronounced, I would say, with 50 plus countries in Africa, a lot of them very small. So in terms of that, and the actual answer to that, if there is an answer, ultimately is to have a fund approach. Mm-hmm. And so that you can go, if necessary, going across geographies as well. And that has been that is a challenge, and I don't underestimate that. Mm-hmm. Not only in Africa, where you've got sort of West African unions, but probably even more markedly in Latin America, where I would suggest there isn't really at the moment those cross-border investment initiatives. But that is ultimately is the answer. So to have a fund approach, so you have multiple investments, it de-risks it and it diversifies your investment. And the other thing is, because sovereigns are looking at emerging markets. Mm-hmm. So because of diversification purposes. So there isn't currently they're attractive from that sense, but there's also multiple opportunities. So I can invest in the public markets in Brazil. And in some ways, that's a lot easier. Mm-hmm. In terms of the quality of the information, mm-hmm. The liquidity of the market. So those are all the challenges, especially investing in greenfield with its additional building risk, or construction risk. So those are all the challenges that sort of have to be addressed. And then we haven't even got to currency. Mm. So you can see that to an extent, the dice are loaded, against not just in Latin America, but against a number of developing markets. And that's what we've got to try and figure out. The good news is that certainly sovereigns are patient long-term investors. I mean, their typical time horizon is 10 plus years. So that's quite, mm-hmm. But for that, they expect an illiquidity premium. Mm-hmm. So if I'm locking my money up, then I need, it's going to be a higher risk adjusted return that I'm going to demand because of that. But let me just leave it there for the moment and let Frederic come in.
Wonderful. Well, thank you. I'd love now, to turn to you, Fred. Thank you so much, Duncan, for those very interesting and provocative thoughts. So, I'd like to ask a question that grows off of actually a preliminary discussion that Fred we were having just a couple of days ago. So that this somewhat loaded question is coming. I was recently at the Brazil Climate Summit here in New York City a few days ago, and one of your colleagues from UBS was running through the various criterion that are considered in a credit analysis for climate investment, which sounded sort of like the criteria that we would expect to hear for any kind of credit analysis, and it just struck me that the criterion that were set forth were ones that most of the projects that I've heard about that are, most exciting in Brazil probably aren't, thresholds they're not going to cross. So, I guess I would really love to hear sort of what do you see as sort of the blockers in engaging, traditional financial institutions in, helping to mobilize the kind of capital that we all so eagerly want to see for these projects.
Well, it's great to be with you. So first, let me thank you, Paul and Anna and the Jain Family Institute for having us, and great to be here with my colleagues Marta, Jorge, and Duncan. And it's interesting you refer to the Brazil Climate Summit, which really becomes more and more relevant every year. And so this year or last week, we had a very good representation from Brazilian corporates. And what felt like a consensus is that, well, two things maybe, or what struck me through the meetings is, the first one is that you obviously don't have a silver bullet to finance the climate transition, which I think goes back a little bit to what Marta was saying. We need a lot of different solutions. And the second key message that I got from the summit is that it feels like every sensible long-term solution will have to leverage, the advantages of Brazil. There was kind of a subliminal message from the summit, which obviously goes to your question is, well, so what are we waiting for? If there is this obvious key advantages. But before I try to brainstorm with you about those blockers, I'd love to go back to what Jorge was saying. And I think it's worth spending a few minutes on what are those key advantages. And I think Jorge mentioned brilliantly, some of the natural competitive edges of the country. When you look at Brazil and you compare with some other emerging markets or LATAM or developed markets, and I would add, I don't want to be repetitive, but I would add to his list the fact that you have stable institutions in Brazil, so it's a democracy. The fact that you have really very strong research centers and intellectual capital on the ground, which obviously is always very important. You have great institutions like the BNDES or local savings, which we know are insufficient, but they perform a great task of structuring a lot of projects. So, when you think about those advantages, plus, the great case studies about ethanol, where Brazil clearly, launched this methodology decades ago, and not because they were, let's be honest, because they were foreseeing that transition to a low carbon economy, but because they wanted to be independent from oil. That was, back in the 70s and 80s. So, lucky them, they were foreseeing something that would become extremely useful. And, for example, that 90% of light vehicles in Brazil can run on ethanol. So it's really it has become a wonderful case study for the country. Last week, when we attended the Brazil Climate Summit, we heard about sustainable aviation fuel. We heard about agribusiness, which has a lot of sustainable practices, such as no-till, which a lot of countries in other regions don't use. We talked about fusion a little bit, which seems to be a new hot topic. It doesn't really apply to Brazil, but that was an emerging topic for sure. Data centers that could be relocated into Brazil, that was something that was mentioned, obviously nature-based solutions. So, before we get into the blockers, I think it's really worth stressing the idea that you have a lot of competitive advantages in the country. And I would love to, mention maybe as a second topic, the relevance of capital markets. Let's put it this way. And Marta obviously brilliantly mentioned the role of BNDES and all the different initiatives and plans and funds that are already at work in the country. We can refer to different numbers, but the number I like to look at when you look at financing the transition, we need approximately $4 trillion a year of investments. And the number from last year stands at about 1.2 trillion. So a key message that we always like to stress is that capital markets are already obviously very much involved. And the question is not, whether they should be involved or not, which is obvious to everyone, but how do we deal with the magnitude? And so how do we crowd in more investors, which is what multilaterals have been working on, obviously, for quite some time. maybe giving you a sense of what we do at the bank at UBS BB, which is that partnership between the Swiss bank UBS and Banco do Brazil. We are the largest bank in Brazil for label bonds. So when you think of green bonds and social bonds and so on, so we obviously look at those innovative instruments, and we spend a lot of time with our clients, with corporations, to think about what are the right policies that they could implement to attract that additional money. And we did a survey, with investors to understand whether that classification, of green, social, sustainability linked, is it a mere classification exercise, which per se is already valid, or does it help attracting more funding for projects? And we find that, to a large extent, it helps attracting more money to projects that have been properly labeled. So there is something to be said, obviously, about label bonds. One area where we spend quite a bit of time is on the transition side, so transition bonds or transition finance, which is obviously very complex. You want to be able to guide your clients or have this conversation with corporates, bearing in mind the key risk of greenwashing, which is a risk that's very present, not just for us financial institutions, but for investors and also for corporates. I would tell you that all of them are very worried about being in the press for the wrong reasons, so the vast majority. So when you look at Brazilian corporates or Latin corporates, a lot of them want to engage and discuss sustainability, discuss transition. So we're spending quite a bit of time on this. And obviously a topic that was mentioned by Marta a few times is blended finance, which also is a topic that we want to be analyzing and pushing to a large extent to our clients. So needless to say, when you think about rewiring the supply chains globally, it's going to take time. I think one of the keywords that was mentioned a few times during those pre-climate week and climate week events is urgency. And I think that's a word that everybody is talking, we all understand the need for the transition. We all see that capital markets are getting there, but we see that the pace is too slow, and therefore that urgency that everybody is sharing. And so maybe I'll finish my words here just by mentioning some on the blockers. I very much think that knowledge, I don't like to use the word education, because investors are very sophisticated. Sovereign wealth funds, which Duncan works with, they are very sophisticated. They have the information, but knowledge of the Brazilian reality, the fact that you can have wonderful case studies at scale and profitable, I think it's always great to share those examples. So I think this event that we're having now, any other summits that groups, companies that have great case studies to share with investors on the ethanol side, on the low carbon cement, low carbon aluminium, all of those examples which Brazil has. So knowledge, I think, is a great one. And maybe the second one, not to be repetitive, because we mentioned FX risk. Marta mentioned they have a mechanism to reduce FX risk. We mentioned the high structure of rates in Brazil. It's always tough to compete when you have high, risk-free rates in the country, obviously. We talked about the scale. Very difficult for a foreign investor to look at, small projects, even though they might be very impactful. But the one I would leave with you, or that I, have to live with on a daily basis, is returns and a financial rationale for investors to be involved. If we want to get to the pace that we're all looking for, you need to have projects that are financially solid, financially robust. Obviously, you can use blended finance to de-risk part of the transactions, but at the end of the day, you need to have returns, market-aligned returns for investors to get, all those great international funds, institutional funds, private equity, and so on. So that's where, policy making comes into play. That's where getting a price for externalities such as carbon comes into play. And once we start pricing carbon, that's where I think everybody will be able to see, well, actually those Brazilian projects, which seem to be borderline profitable, they're actually very profitable. So, I'm a banker, I work in a bank, I'm not involved in policy making, but we have to recognize, SDG number 17, which is that idea of partnership and getting the public, the private money, but also the policy making, which I think for me is a key part of that equation. Let me pause here for a second to hear your reactions.
Thank you so much, Frederic. That's very insightful. I was listening to you and just thinking about how, well, we've been talking a lot about how much money we need in that market and the trillions. So you hear CPI saying if 8.6 trillion needed and how much we only have 1.3. So in all the multilateral institutions pledging to bring 100 billion more here, 50 billion more there. And sometimes it just struck me how difficult it is for us to get to the other side of the discussion, which is not just financing green projects, but rather greening the financial sector and really structurally changing incentives within the financial markets so that green investments come more naturally, so that we're not just asking for concessional finance and having to have the race for having a sharp concessional finance destination, and otherwise the race will be lost. So what are some of the criteria for greening the financial sectors that you, Frederic, and probably Jorge will have a take on this as well, probably Duncan, Marta maybe as well, but what are some of the main aspects that you see that are still lacking to be normalized within the market? So maybe should we be talking more about green taxonomy and just having a final take on how all countries are gonna use the same taxonomy, or are we talking about more transparency and risk disclosure for the financial markets? And I know it's a sensitive topic, and I don't want to get everyone not talking, like just having to address what may not be in the interest of their own organizations, but maybe this is a good panel for us to brainstorm around, yeah, what is it that's still lacking so that the clients get on board more naturally, and not just because, you know, there's a brand. How can we avoid greenwashing so that you also don't have that kind of danger? So what should be maybe multilateral institutions be doing to bring those solutions into the table and be less about pledging new replenishments and bringing more concessional capital in with the sacrifice of some countries, let's say, but instead the big fights that we're not yet picking with the relevance that they should have?
So it's great that you mentioned this topic, and maybe I'll start, but obviously by all means I'll let my colleagues help me, complement me. It's obviously a very important topic that we take very seriously at the bank, this idea of greening. Let me mention maybe two comments to help us frame that question. The first one, in terms of amounts, if I share with you, the amounts of money that we've raised over the past 2+ years or 2.5 years since we started tracking those numbers at UBSPB, we've financed more than $30 billion worth of projects. That's for the Brazilian market. And we also have a very ambitious target by 2030 to reach 100 billion. So obviously, in your previous comment, you mentioned, we need to get to the trillions. So you might be saying, well, 30 billion, 100 billion is not going to get us there. But at our level, it's obviously a very ambitious target, and especially when we compare with other institutions or when we discuss with our clients. One thing to stress, that idea of the financial incentives that I would mention to you, which we hear on a daily basis. And if we go to the other side of the table and we talk to corporates and we tell them, well, you should invest, capex to green your factory, or to have more renewable energy, or to have a zero, low carbon cement, or low carbon, whatever. Well, they're telling us what is the return, the rate of return on that investment. And so it's interesting to see that if you're a low carbon cement provider or a Brazilian low carbon aluminum provider, you don't necessarily get a premium or a green premium. I can share an example of a company in the food and in the food industry in Brazil. They are very strict on their supply chains. They have certified ingredients, which for them are costly. They're more expensive than the non-certified ones, and they don't necessarily get a premium by their end customers. So that's part of what I was mentioning earlier on the equation of we need to find or maybe think about financial incentives for the companies to be able to do the right things. And a lot of our clients want to do the right things, but I don't think we can rely on that goodwill and the good intentions, obviously of senior management. So I would, really stress that idea of getting the financial incentives and also stressing the idea that there's no silver bullet. So you're going to need, blended finance. You will need, great development banks like BNDES to be involved. You will need the private markets. You will need the international sovereign wealth funds, and so on and so forth. And I would really like to finish by stressing one idea, which is the social side. So we're very focused on carbon and the E of ESG. When you apply this in the reality of an emerging market such as Brazil, and when you look at it from a global angle, and Jorge touched on it already, you have that idea of just transition. You have that idea of redistributive effects between the different countries. So when we think about getting to Paris, what I mean by this is getting to 2050 with a net zero economy. Obviously, you have to think about how do I think about which countries are still allowed to issue or to emit CO2 in the next few countries. How do we all sit at the table to give those allowances and discuss within between each country? So one thing that I like to say for the case of Brazil is that you don't solve the environmental side if you don't take a very close look at the social side, which makes our discussion even richer, I think.
Anyone else like to add anything?
I'm gonna add a little bit on what Frederic was saying. One thing, we are very late on that, which is, as Frederic said, carbon pricing. But it's very difficult to do it globally, but we need to do it globally. Otherwise, we will have carbon leakage. So we have to advance the Article 6 of the Paris Agreement, and we have to do it fast. Because if we price carbon, the risk return adjustment will happen, and naturally the resources will go to the right places. So if I was to pick one thing to fight for, it would be a global carbon market, regulated carbon market to price carbon, so the greenium premium will be paid and the money will go to where it has to go. But as you were saying, this bit by bits they are very important too. The blended finance, the grant money to the risk, to adjust the risk return of the projects, they are also very important until we don't have the global carbon market in place. So that for me is key.
Thank you. Jorge or Duncan?
I believe that I would completely agree with what Marta just said. You're completely right. A properly regulated global carbon market, but it isn't anywhere near on the horizon. So in the meantime, the next best thing is exactly what you say, where you can have some concessional capital, blended finance to de-risk some projects and allow capital to come in. But also so where you have flexible anchor investors who can invest anywhere in the capital stack. When I'll go back to the point is, the shortage is usually equity. It isn't debt. And that's the real challenge to get that in. We've got lots of vehicles as you've been outlining in terms of ways that we can get debt into these projects, but it's equity that's actually in short supply.
Jorge, would you like to weigh in?
Yeah, just a quick comment. I fully agree with what was already mentioned. I would add the importance of trade and investment. These days, as we know, there is an increasing kind of deglobalization and increasing obstacles for trade to be a key ally of decarbonization. We see discrimination, protectionism, and subsidies are actually blocking the development of the green manufacturing sector, and even more important, perhaps, countries that have comparative advantages for producing cheap green products and services are not realizing their potential because of many things, including what was already mentioned regarding the carbon markets and many other things. But trade and investment have to be considered a key partner of how to speed up decarbonization at a cheaper price, at a cheaper cost, and it has to be considered as well at being at WTO, being from many other arenas, but I would add it to what was already mentioned.
Fantastic. Well, my goodness, how 90 minutes evaporate, right? We're now just a few minutes before the end of the session. My apologies to those in the audience who may have had questions in mind that we haven't been able to address, but I think we can all appreciate the richness and many layers of this discussion. So many threads, it would be delightful to pull out if we had more time. But as we wind down here, I wanted to give Anna a moment to offer some closing thoughts here on the basis of our discussion. So.
Thank you so much, Paul. Thank you, everyone, for the great discussion. I guess some closing remarks would be on the insights that we've raised here. Well, I guess, first of all, this global level kind of coordination aspect. So we had both the Article 6 global carbon markets solution going, but also a thought on the diplomatic advances on trade and investments that we need to have, especially considering opportunities within power shoring so that countries can actually acknowledge the different comparative advantages that you can find, especially in developing countries. Finally, also think about nationally specific probably solutions like getting fund approaches to tackle ticket size challenges and also get more equity going for innovation, considering that's one of the mechanisms that's still lacking for the innovations that are still needed for the transition. Also, getting across, and that applies for Brazil and any other developing country, a better understandable structure on how its markets work and getting a little bit more of that kind of conversation that we're having right now across the board for the private sector. And also exploring labeled bonds options, like Frederic was mentioning, of course, thinking of solutions to all of the backlash that may come from greenwashing from it. So also thinking of what is the kind of mediation that kind of investment needs market-wise in the country and beyond. I hope that summarizes well.
Very good.
Absolutely. So, many questions, maybe fewer definitive answers at this moment, but so many opportunities to pursue, and certainly seeing kind of the energy and I think the synergies across this conversation has been very exciting and motivating, I think, for moving forward. So with that, I want to thank again our really fantastic panelists, Marta, Jorge, Frederic, and of course, Duncan here in the office. Thank you so very much, Anna. It has been beyond a pleasure to collaborate with you to prepare our questions and the structure for this event. I hope it won't be our last. And thank you, of course, to the audience for indulging us and for what I hope has been an interesting and thought-provoking conversation. And with that, I'll leave you all to return to your climate weeks and look forward to seeing you all again soon, hopefully, at a future event.
Thank you, Paul. Thank you, everyone.
Thank you.
Thank you. Bye-bye.
Bye-bye.